Hello and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of Deal Central, where we get you the sharpest news and views from the world of mergers and acquisitions, private equity and equity capital market deals. This is a special year-end show and the focus is going to be on equity capital market deals. How was 2023 and what are some of the key trends to watch out for in the next year? Joining us on Deal Central today are two senior bankers, one from the domestic banks and one from the global banks. We have V. Jayasankar, MD and member of the board, Kotak Investment Banking, and Jibi Jacob, MD and head of equity capital markets India from Jefferies. V. Jayasankar as well as Jibi, welcome to the show and thank you so much for taking out time.
Thank you, our pleasure.
Thank you so much.
Yeah. Jayasankar, let's kickstart the show with you. If you look at the announced IPOs on the main board, of course, the SME board is a different segment altogether. That also saw a lot of action in the in calendar year 2023. But if you look at the main board and you look at the announced IPOs, around 57 announced IPOs, they raised roughly around 49,300 odd crores. Let's compare that to last year. Last year saw about 40 main board IPOs, raising around 59,302 crores. So that's the YOY comparison at the beginning. Now, if you look at the IPO market action this year, prior to Mankind's 4,000 crore IPO in May, it was a rather subdued and tepid market. And after that, that's when perhaps the market got galvanized and sort of picked up. Post Mankind, of course, the deal environment changed dramatically. So what factors, in your opinion, do you think led to the sudden pivot? Because it's after that that the action really began.
Yeah, sure. Ashwin, that's a very interesting comment you made. Last year, around the same time, there were 2 or 3 macros that were playing out very strong. Everyone was talking about China resurrection of the capital markets. The forecast was China will give a 15% return. And the second issue was what's happening to the US inflation, macros, and the interest rate hikes. And US Fed had not indicated any stop that we are seeing today. So these 2 factors had its impact on India. The FPI investors pulled out about $5 billion in the first 2 months of January, February, and all the money was going to China. And then investors realized sometime around March that China is not unlocking the way everyone was predicting.
Right.
And India started taking center stage. Our domestic flows were very strong. As you know, the SIPs were contributing close to $2 billion every month. And there was enough domestic money that was waiting to be invested. And the FPI started looking at India in a much bigger way from March onwards, since China was not unlocking the way they anticipated. And it was at that time that both of us were involved in the Mankind IPO and we saw a great opportunity. It was a fantastic book, very strong demand from FPI investors as well as the DIIs, and that in a way set the tone, I would say, for the full year. So that IPO was a stupendous success. Today the stock is probably up 80-85% from its IPO, and it set the overall tone. The second thing I would say is on back of that, a lot of other IPOs started coming to the market, but the difference between the current year versus the previous year or even 21 is this has been more a market of small caps and some mid caps.
Right.
So though you talked about 57 IPOs, the average size of the IPO is about 100 million, right? And the average size in CY21 was 250 million. So it's probably 40% of the size of the IPOs of CY21. And if you look at the indices, large caps are given a 17% return, mid caps 41% return, small caps 48% return. So naturally with the returns being more skewed towards small cap and mid cap, you had a lot more IPOs on that front, and investors have also made good money.
Right. Jibi, quick thoughts on the turning point. He spoke about the China factor. He also spoke about the fact that most of the IPOs this year were more skewed towards the smaller and the mid cap space. Your thoughts on the entire turning point, and then of course there was a rash of activity.
Yeah, I think for any primary market activity, right, I think there are predominantly 3 things that has to come in place. Maybe not necessarily in that order. One is a good secondary market. The VIX, that is the volatility index, should be on the softer side. And more importantly, how are the FIs and DI money flow into the country, right? DIs, of course, being local, as Jaya mentioned, more than $2 billion of SIPs coming in. First 4 months of this calendar year, you had FIs more or less undecided, about India strategy been pulling out, but May onwards you saw them putting in anywhere around $4 billion month on month, and that is where the Mankind IPO happened, and it was a great outcome, a great success, and back of that you saw some more companies planning that IPO. So in a nutshell, I think what we are also seeing is very high quality companies coming into the market right now versus 21 and 2023. I would say those sizes have gone down. I think the quality of the company and the pricing of IPOs has been a great contributor to the outcome that we are seeing today.
Jayasankar, he's referred to pricing. Any trends that you noticed this year in terms of pricing, where companies being a little more cautious in terms of pricing, and also the participation in the anchor book? Anything that stood out for you?
So if you look at the IPO returns, the listing day returns for most IPOs of the current calendar year, that's roughly about 35%. And that's fantastic, right, from an investor standpoint. You don't see a 35% return typically in any year. And if you look at the listing gains to date for all the IPOs that happened the current year, it's about 55%. I would say to some extent, because a lot of the IPOs were small caps and there are probably about 6 or 7 issues greater than 1,500 crores, it's been a little bit more of a buyer's market.
Right.
Right. And therefore, the IPOs got very attractively priced. Investors have made a lot of money. And therefore, as you look at the outlook, investors have a very, very positive sense of what could happen to the IPOs next year. So in that sense, I think it's been a great year for everyone concerned.
Right. Now we've got some of the key trends captured. Yep. Let's move on from IPOs to the world of bulk deals, block deals. There was a clear block deal mania in 2023, right? Jibi, help us understand what explains this huge surge in the number of block deals across sectors. If you look at some of the data, as of 22nd December, the total amount of bulk and block deals stood at 3,86,940 crores. That's against 3,26,863 crores in the earlier year. One trend that clearly stood out was some of these block deals were unusually large. Some of them were, they were proper cleanouts, which you wouldn't have sort of visualized in earlier market situations. Take, for example, the Barings Coforge deal. Take the recent Blackstone Embassy REIT, for instance. So what gave folks the confidence to opt for this route in such an aggressive manner?
Yeah, I think it goes hand in hand, right? The moment the depth of the market increases, the confidence of private equity investors, because of late what you have seen is in the last couple of years, a lot of controlled deals that has happened in India. Earlier, the only route for them to exit was M&A, and capital market as an exit was not really there, right? And I think you will also see that KKR Max deal happened, that in my view still did the largest percentage stake sold in a block deal, which around 27 or 28% exchanging hands. And we got a lot of inbounds in terms of how private equity investors should look at getting their portfolio companies into the market and eventual exits, right? The LPs are given far more confidence that you can exit through an IPO and future sell downs in the market, right? And as you rightly said, be a Coforge or a Blackstone Embassy REIT gives far more confidence to this entire private equity investors that this is a suitable and viable option. And it also goes hand in hand with the money flow into India, right? More from the FIs and the domestic, which is still continuing. So overall, a very conducive environment, and we do believe that trend will continue into next year and many years to come, because we just did an analysis. Around 80% of the companies that IPO in India, above $100 million size of IPO, are backed by private equity investors, right? So the funnel that gets carried on to 24 and 25 for future sell downs is quite a very strong pipeline. And there was to be a point where post IPO QIP is to be the far more important product out there. Today for capital market bankers, I think after IPO, block trades have become that important, right? I think it's overtaken QIP because QIPs are not happening as much as they would have happened in the last, say, 5 years back, right? So that's an important trend that we are seeing, and everybody will try to capitalize on it as the window opportunity emerges. And December was a classical month, right? I think the entire activity that we saw in December is far more than what we saw in the last 11 months.
Absolutely. Perhaps some of these big block deals, in any other market, they would have been perhaps a classical M&A situation, right? Who knows, some of them would have been potential M&A situations that would have been converted into an equity capital market mandate. What is the reason why private equity firms are ready to sell such amount of stakes at one go, Jayasankar? Is it the speed and does time play a big factor in them opting for the block deal route as compared to perhaps giving a mandate to a classical M&A banker, going through the entire due diligence process? What is the reason why blocks are finding favor with PEs to such a great extent?
Yeah, sure. I'll touch upon what Jibi spoke about, the Max Healthcare KKR deal, where both Kotak and Jefferies were involved. See, in that transaction, about 48 to 50% of the blocks were sold in just 3 tranches in 1 year. Prior to that, no one would have believed that you can sell 50% of the company, $2 billion in just 1 year in 3 tranches.
Yeah.
And in a way that kind of gave confidence to a lot of PE investors to say we can make a similar exit. You look at the embassy transaction that you spoke about, where we were involved last week.
Yeah.
We sold $850 million, nearly 24% stake, and Blackstone has exited again somewhere about 48% in a matter of, call it, 3 years. So now PE investors know that if they have a 50% or a 60% stake,
right,
it is possible for them to make an exit. Sona Comstar, Blackstone had a 65% stake. In 2 tranches plus IPO, they exited fully.
So does the pace of exit make this an attractive route? What is the reason?
It's the pace of exit. So if you were to take a company public, and if the PE investor were to exit, call it 50, 60% in a matter of, call it 2 years from the time of listing, it is possible today. And the other thing, Ashwin, I would say is there's a pretty strong domestic and foreign flow. If you look at the current year, the FIs have probably pumped in somewhere about 20 billion. The DIs have pumped in about 22 billion. $42 billion is a lot of money chasing, and you had only a market of small cap and mid cap IPO. So it was very natural for this money to really find its way into some of these large block deals. And that's the reason if you look at the block deals, they're probably 3x or 4x of the IPO size.
Right.
And it's very natural. And our belief is that this will continue, will sustain. And from a FPI standpoint, I don't think there is a limit to what money can come in. So if a Max block doesn't happen or an embassy block doesn't happen, then some of the global funds that's looking to invest anywhere in the world, including India, will not come here. So the fact that you're making these deals happen is making some of these global funds to focus. These are not India dedicated funds that necessarily have to invest. You have a great opportunity, extra few $1 billion can come in. So that's what is making a difference.
As I was parsing through the data, I realized that 1/4 of the total block and bulk deals this year came from the financial services segment. Jibi, you mentioned that you expect a lot more block deals to continue in the next year, 2024. Which are the sectors you think financials will continue to hog the limelight?
I think our belief is financials, technology, and healthcare.
Okay.
These 3 sectors on a value side will dominate. But if I have to look at from a volume side as well, manufacturing as a general theme will also see favor, right? But you don't have companies of that large size to have manufacturing on the value side. Just on the other part, right, the very interesting question that I asked, why public market exit for private equity guys, right? So the other option is more private, where a strategic comes and takes control.
Right.
And that's not very easy to execute, right? Because once you cross the threshold of the takeover code, somebody has to make an open offer which reaches to 51%. That's quite a large amount of money. And if it's a global strategic, they know that taking companies private in India is virtually impossible, right? Because of the high threshold that we have 90% of the shareholders voting in favor. So, with the right amount of capital flows into India, I think public market exits makes far more easier to execute. And it's an outcome which also kind of gives you the right value.
Right. So we've got that established, why blocks are the flavor of the season. Now let's move forward to a few other, big picture factors, right? It's not just FPIs, it's not just China, but also some of the local domestic environment that shapes investor appetite, right? If you look at the recent win of the BJP central government in some of the state elections, right? That sort of is being looked at as perhaps like a semi-final of sorts, and there's a lot of buoyancy.
Yep.
And people are hoping that if that momentum continues and if the same government comes to power, then of course there would be policy stability. And as you all would know as bankers, stability is something that is right on top as far as the priority list of investors is concerned.
True.
Now, what signal does that send to investors and corporates? What are you picking up post the announcement of the recent state election results. What's the level of optimism like? Let's start with you, Jayasankar.
Yeah, sure. So, for example, you saw after the state election results, FPIs have invested close to $7 billion in December. That's close to 30% of their overall flows in the country for the current year. That tells you the kind of optimism you generally see when there is a political stability. And you can see in a way investors are factoring that there will be political stability after the national elections. Forget about who wins or who loses. But what they're factoring certainly is that there is going to be policy continuity, political stability. And you might be surprised to see the deal volumes keep pace probably well into the election season. So the period where it gets shut down may be much smaller. From a corporate standpoint, the way they're looking at everything is 22 was a very tough year because of the tech meltdown, global equity markets meltdown. 23 continued to be tough globally. India was a bright spot. If you look at the outlook for 24, global equity markets are not likely to perform anything great close to 21. Investors are expecting the global equity markets from an IPO standpoint to come back sometime in 25. India will continue to be that bright spot. You will see larger IPOs, mid-cap IPOs far greater in number than what you saw in 22 and 23. And corporates are making that preparation. Even the PE investors are factoring in that given the amount of stake that they own in companies, that it will be a good block deal environment for them to exit. So all in all, good outlook.
So that's the overall sentiment that you're picking up, Jayasankar. Jibi, what are you picking up from
I think
the market?
Yeah, very similar, right? So if you look at 2014 elections or 2019, and we did this quick analysis, right? The DRHP filings and the IPOs getting priced fell close to around 55%, right? It's just not deals getting done, but also companies wanting to file their DRHP, fell by 55% 6 months prior to the elections, right? So September onwards, you saw a complete lull in 2014 and 2019, right? And we all, love to use this phrase that this time is different, but actually it came out true. And what when you just really double click between 21 and 22, right? While the volume of IPOs fell by 50%, it was virtually 2 months in that entire 12-month period where 55% of the IPOs got done, right? So what it signifies is that you have to be in the state of readiness. You can't really call out what is the time where there will be a great window where you can get the IPO pricing done. And when December, the state election outcome, as you rightly said, right, and all the flows are a validation of that fact that stability for the next 4 or 5 years is greatly valued by investors, and we expect that momentum to continue. In fact, a lot of the issuers are planning to maybe launch their IPOs in that March to May, June window, right, where you will be in the middle of elections or the election results are coming out. That just kind of showcases the confidence that people are building in. That will be a great time to look at the market.
Absolutely, fascinatingly poised. Jayasankar, you referred briefly to the tech meltdown. Now, if you look at data, and this is as per a recent report by Traxon, according to it, at least the funding winter, the so-called funding winter in the Indian tech startup system seems to be well and truly underway, because they are saying that there has been a 72% YOY decline. $7 billion versus $25 billion last year, hardly about 2 unicorns that got that were birthed this year, as compared to earlier years where you saw perhaps unicorns being born every other week, right? Every other week you used to see unicorns hitting the headlines. So Jayasankar, in this scenario, right, and I know you're an optimist, but in this scenario, do you expect startups, including some startups that have been incorporated abroad, to perhaps consider listing in India in 2024 on the basis of the overall optimism?
Yeah, there are quite a few conversations we are having with companies, startups which are incorporated abroad. Some have attempted a listing in the US, and the feedback that they're also getting is that Indian market probably pays a premium for good profitable companies. If you look at many of the startups compared to 21 where the focus was only growth, now investors and the startups talk about profitable growth. So everyone is very, very conscious that I need to have a path to EBITDA in the near term. I need to generate free cash flows. And the good news, if you look at Zomato, Nykaa, Policybazaar, all of them which are listed, you can see how that momentum towards profitable growth has accelerated in the last 1 year.
Are there more like them? on the annual?
We are seeing in the startup world a lot of companies getting prepared to that state where they can go and sell their story that yes, we have cash flows, we have profitable growth, and some of them you should expect to hit the markets immediately after the elections.
Jibi, the startup space, your take?
Yeah, I think more importantly, what people have realized is that if you have a product that is built for India, it is much better to list in your home country, right? So you are seeing a lot of conversation wherein people want to onshore their legal entities which were done offshore, maybe for a foreign listing. Second aspect is with the tech meltdown, that valuation arbitrage, right, between an Indian market and a US market, so to say, is really not there. The only one subsector we feel that people might still consider an overseas listing is the SaaS market, where the depth of US is far more. It's not really a product that you've built for India, but it's far more for the US and the European market, right? That trend might continue, but as I said, if the product is built for India, you have far more serious conversation happening for Indian listing. And I think it's also very interesting to note, right? You have the parent, like a Unilever or a Nestle, and you have the Indian subsidiary listed here. The valuation difference is anywhere between 3 to 4 times, right? If you look at price to earnings, EV by EBITDA or EV by revenue. So it really shows that Indian market has depth for high quality companies, and you might have a better value realization in Indian markets.
So both of you believe that next year could see some startup IPOs
Exactly.
From the tech space.
Yeah.
One aspect that I noticed this year, and we at Moneycontrol, we've been sort of trying to cover these new upcoming sunrise segments, especially in the IPO space, as closely as possible. There have been many firsts this time. Like for example, if you look at Ola Electric, the first EV, right, which is attempting to make a listing on the bourses. If you look at Office, first co-working space provider. If you look at RK Swami, first integrated marketing services group. So many of these categories that were earlier not familiar with bankers and with journalists, they are springing up. Any such newer niche segments that both of you are spotting where perhaps there could be some listing action next year? Of course, you can't take names, but maybe segment wise?
Yeah, I think this is public knowledge of DRHP file Entero Healthcare, which is in the pharma services side, right? Started off like a B2B, order aggregation to far more value-added services. So that's a very interesting space, we believe. We also believe there will be a lot of transactions on the energy transition space.
Okay.
So a lot of new energy or green energy kind of stories that are coming out of the market. Hopefully in the next 6 months, we should have a large IPO from that sector. So there are interesting themes that are emerging clearly.
Any emerging sectors that you would like to highlight, Jayasankar?
So I would say, Ashwin, the new age companies are very, very broad brush, right? It covers consumer tech, it covers fintech, it covers EVs, it covers new energy. So that being the case, you will find several new themes coming to the market every year, and I think that's going to continue, but for the break in 22-23. For example, Honasa that went public, it was a startup just a few years back, but it grew very, very fast. It started as a digital first BPC company. Today it's a hybrid model. So you are going to find several interesting companies coming to the market on a very regular basis.
Right. So quick last question before we wrap up the show. We spoke about your picks when it comes to the block deal space. Jayasankar, your 3 top sectoral picks when it comes to the IPO space for next year. Stick your neck out.
So it is going to be new age, obviously. You are going to see some FIG as always.
Okay.
Healthcare and pharma will probably continue to see.
New age, FIG and healthcare and pharma.
And maybe consumer.
Okay, he's added a 4th one. What about you?
No, I think pretty much the same, right? So dominated by technology, financial services and healthcare, that will be our top 3 picks.
All right. I have to slip in this question because at the end of the day, it's the moolah that matters, doesn't it? What have been the key trends when it comes to the fees space? I-Banking fees in the equity capital market deal space. Of course, if you compare India to say perhaps other jurisdictions in Asia or in the US, perhaps the cut may not be as generous as the jurisdictions over there. But generally, how's been the the trends in the fees space? Have the fees gone up? Are clients ready to pay more to bankers?
So I would say the fees has more or less been in the same zip code. But the
Could you
only
give us a percentage, perhaps? What's been the average?
I would say 2% handle, in that zip code. But what has also interestingly happened is the sizes of deals in India has gone up. So an absolute fee that each banker was making, so maybe 3 years back versus what each bank is making today, has gone up in that sense. Otherwise, India has been a far more stable fee market for all of us.
Jayasankar?
I would say it's been very stable for the last few years from a transaction standpoint, and we expect that trend to really continue.
All right, on that optimistic note, Jibi as well as Jayasankar, thank you so much for taking out time and sharing your perspective on some of the key trends that one has to watch out for on the capital market deal space going ahead next year. Thank you so much.
Thank you so much, Ashwin, for having
Our
us.
pleasure.
Thank you.
All right, with that, we have come to the end of the show. Thank you so much for tuning in. This is Ashwin Mohan signing off. Keep watching Money Control for more news, views, and updates.